Hello, in this presentation we will record sales on account within our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're going to take a quick look at QuickBooks and then jump back to Excel and record this information. We're going to have a sales on account. This will be the typical invoice that we will be recording here. We've seen them a few times. We're going to go a bit faster. This is one of the more complex transactions, however, to actually record, even though it's one of the more simple transactions to put the data into the software such as QuickBooks, because the software such as QuickBooks has already put in the difficult work driven by the items. And so it is worth taking the time to see what those items are doing, what the transaction looks like, how the software is actually recording this, as we will see when we put this information into Excel. So here we have the invoice we're going to create. We're going to have music store stuff being the first invoice. The date will be input. The invoice number will populate automatically. And then all we need is the item number. And once again, we can imagine just knowing what guitar we have and just putting in that item number, which is a bit long for this one, but we have that. And then it would just auto-populate, which is the Epiphone Standard Pro. And we have the rate would populate for us. It does populate for us. And then we have the amount. And then it will determine if we have sales tax applied to it. Typically we do, since this is a form of inventory that we are selling. And that sales tax 5% calculated as 600 times 0.05. Giving us the $30, adding that to the 600, we have 630, that there, and that there, what we're calculating here. That's going to be all we need to know really to put this information into the system. If we want to know what the system is doing, we'll get that from putting it into Excel. What is it doing? In essence, when we see an invoice form, we know that accounts receivable is increasing by the total of the sales plus the sales tax, the 630 in this case. We know that sales of some kind is going to be increasing. That's going to be for the sales price of the 600. We know that there's going to be a payable resulting from us owing money that we're going to collect to the state for the sales tax of 30. We also know that the inventory must be decreasing by the fact that we're getting rid of a guitar in this case, which is part of our inventory. We don't see the dollar amount, but we know it's going down. We know the system knows the dollar amount if it had been input into this item correctly. And we also know that the related cost of goods sold will be impacted as well. Let's take a look at how in Excel. We are now going to record this invoice into Excel. We'll do it a bit faster here since we've seen this a few times. We're going to put the date at 2/19. We'll then put the information in, starting with the sales half and then go into the cost of goods sold or inventory half. I would think about it in that format, by the way, when we're making these journal entries. First, think about it as if there's no inventory involved and record a journal entry without any inventory or the related cost of goods sold, then record the inventory and related cost of goods sold. Our thought process is cash affected. We're going to say no because this is, in essence, a purchase on account, a receivable item. So we got an IOU. So people owe us more money. That's a debit. We're going to make it go up by doing the same thing, which is another debit. Copying the accounts receivable in AJ6, going to G12, right-clicking there, and pasting 1, 2, 3. We're then going to put the amount we expect to receive, which will include both the sales amount on the sticker price, which was 600, and the sales tax at 0.05 or 5%, 0.05 times 0.05, which is another $30. That plus the original price of 600 gives us 630. Easier way, faster way, one-step way to calculate that would just take the original price of 600 and multiply times 1.05 or 105%. 1 for the original 600 plus the 0.05, 105%, giving us that 630. We will repeat that process here in cell H12 by saying equals 600 sales times 105% or 1.05. We're then going to have a credit. That typical credit will go to the revenue account, in this case the revenue account of merchandise sales. Remember that the whole income statement starts with revenue and then expenses under the equity section in the dark blue area. It always has a credit. It's going to go up again when in the credit direction. We'll copy this account, merchandise sales, scroll back up, Put that in G13, right click and paste 1, 2, 3. We'll indent that then. We're going to go to the Home tab, Alignment Group, Increase Indentation, the amount, not the 630, but the 600. We're going to put a credit of 600. The difference, 630 minus 600, is the sales tax, also calculated as 600 times 0.05. We're going to use the plug formula to put this in for negative SUM, double-click the sum, highlighting these cells. It's going to take those, subtract them, and flip the sign for the $30. Now the debits equal the credits. We just need the amount. That amount then, the sales tax payable, has a credit balance. We're going to increase it in the credit direction with a credit by doing the same thing to it. Right-click, copy, putting that in cell G14. Right-click, paste 1, 2, 3. Then we're going to format, Home tab, Alignment Group, increase the indentation. There we have it. There's the first component. We're going to go ahead and post this out. We haven't completed it yet. We do have the inventory and the cost of goods sold, but we'll do that in a separate journal entry, even though happens at the same time. We have these accounts receivable. Before we post that, let's freeze the panes if they're not frozen already. Freeze the panes lessens the pain. So we're going to go up to the View tab, Windows Group, freeze panes, and freeze the pane. Okay, so then we're in the accounts receivable, second account here on the trial balance, second account on the general ledger as well. So I'm going to make them side by side right there, make it nice and side by side. So we're in AQ10, and we're going to select equals, point to 630, bringing the balance to 2,120. Scrolling back over, we should also see that balance here, 2,120. And of course, we're out of balance. If you check it down here, we're out of balance down here. Then we're going to post the second one. We have merchandise sales. It's a credit. Merchandise sales is here. We are going to find that same account on the general ledger, same order. Where is the assets here in green and the liabilities in orange, and then the equity in light blue. Merchandise sales down here, there it is. We're in cell BH31. We're going to have to scroll up just a tab to pick up that 600. That's what we'll do now. We're going to say equals in BH31, scroll up just a tab, and pick up that 600 in I13, and enter. Notice we have all credits here because it's sales and it only goes up in the credit direction. We have the 1,600. We're going to scroll to the right and see that we have that 1,600 in the trial balance, as I hope we do. Confident we will. There it is. We're out of balance by the $30 that represents the sales tax payable. There is an impact, by the way, of course, because on net income, because we increased the revenue. Revenue minus expenses is net income. We actually have income, this representing a credit, not representing a loss. This is a credit. Credits beating the debits of 454 revenue then, or net income of 454. We're going to post this now. Here we have this sales tax payable. Here it is here, same order from the trial balance to the general ledger. Let's go find that account. Green accounts, assets. Orange accounts, the liabilities. We're looking for that sales tax payable, which is right there. We're in BD27, BD27. We're going to find that $30, so we're going to say in BD27 equals that $30, bringing the balance up from 173 up by 32, 203. Scrolling back to the trial balance, see if we can find that 203 on the trial balance. There it is right there. Looks good. Are we back in balance? Hope so. We are. Debits minus the credits equals 0. That is good. Next, we're going to say that this accounts receivable, we need to post that not just to the general ledger as we did here, but to the subsidiary ledger, that in order by customer, not just by date. So we're going to scroll all the way over to the subsidiary ledger. We're scrolling right, just scrolling on over. It's a nice scroll. We're having a nice scroll today. And we're going to be over here. We're looking for music store stuff. Music store stuff. Anderson, Jones, Smith guitars. There it is. Music store stuff. Already owes us 816. Bought some more guitars. So we're here in CR25. We're just going to post that same 630 by saying equals in CR26, I should say, and point to that 630, bringing the balance up to 1,446. If we add up all of the accounts then, it should add up to 2,120. That then, hopefully, will also be on the trial balance. Let's check that. I'm going to put my cursor right on the other side of the freeze panes and then go right. So it just pops over there. And there's the balance, 2,120. We've recorded the first half. Now we're going to record the second half. That is the reduction of inventory and the related cost of goods sold. There's the inventory, has a debit balance. We need to make it go down. We're going to do the opposite thing to it, which in this case is a credit. Right click and copy. We're going to skip a cell, skip another cell because we want it on the bottom, and then put it in cell G17. Right click, paste, 1, 2, 3. Going to work on the formatting, home tab, alignment, increase, indentation. And I don't know what the amount is yet. Once again, we'll check that out, but we do know that we're going to have to debit something, and we're going to debit the related expense account, the cost of goods sold account. Cost of goods sold down here, there it is. We're going to right click on that, copy it, put that on top here in G16, right click, paste 1, 2, 3. Now we just need to know what that amount will be. We're going to go to our inventory subledger and see what it is. It's not that same guitar this time, so we probably don't have the cost memorized. So we're going to go to the right, going to the right. This is not the sales price we're looking for. This is, of course, the cost, what it actually cost us. What did we actually pay for it, or at least the average cost method of what we paid for it, which will be the same because I don't think we changed our price. In any case, we're looking for an ENLPB type guitar. Here it is, an ENLPB. That's a really long subtitle name. We think could have got something short than that. But we are now going to say that the date is 2/19 and they cost 480. So if we only have one of them, so we're going to say we sold that one, and we'll record that in our sub schedule. We'll say we sold that one tab. I'm in cell CK21. We're going to say that it cost, of course, equals that 480. The cost then is going to be the 1 times 480, which I think will be 1 times 400. Let's just see what happens. Yeah, it's 480. And then we're going to go over here and put that same amount should go here. That's going to be our debit and credit, the 480. So we'll say 480. And then we're going to have a credit negative of that number, 480. And then we need to know what is still left in ending inventory in our worksheet. We had one of them. We sold one of them. So we don't have any left. So we're going to say that this equals, I'm going to do that with a formula, this one minus that one. We got to do anything we can do with a formula, we're going to do with a formula, even if it's really easy like that. And then we're going to say that this equals the 480, and then multiply this out, meaning equals that 0 times this 480. Then we need to adjust the accounts at the bottom to add all this up. We're going to scroll down, and we're going to double click on this and see what they're adding up. We need to fix this one to go to 0. Now that might be a little hard to find in this formula. It might just be easier for us to just redo the whole formula. So I'm going to do that way. This is not a very technical formula, so this is the tedium you have to go through for the simplicity, trading off tedium and simplicity. So we're going to say that this equals, scrolling up to the top, we just want to pick the last one in each one. So that 800 plus 800, this is the formula. And then we're going to say that 0, the second one, plus, there's the formula. Scrolling down, that one, plus, there's the formula. Scrolling down and so on and so forth, that one, plus, second one, plus, second one, plus, second one, plus, only one, and enter. 2032, that then should be what is in the trial balance once we record this journal entry. So let's check that out, see if that's the case. We got to record this entry then. I'm going to go all the way back by clicking just on the other side of the freeze panes and then going right till it pops back over there like that. And then we're going to record the cost of goods sold. So there it is there. Scrolling down, there it is there. That's what we're going to record. Scrolling to the right until we find that. We have assets, then we have liabilities, then we have equity, then we have the cost of goods sold way over here in BK 24. We want to be in BK 24 because that's where it goes. And then we're going to say that equals that 480 equals 480, brings the balance up to 1,280. Let's go back and see if that's on the trial balance as well. Fairly confident it's going to be there. There it is, 1,280. And we're off by 480 now. We're back down to a loss of $26 after that. Now we've got the inventory. There's the inventory here. Here it is on the trial balance. We'll go ahead and find the inventory now. It's going to be the third account on the general ledger so that we can post this. I think it's in AQ, but I'm going to scroll over so we can have them side by side and then scroll down. We want to be in the credit column. We are in AR28. We will say that that equals, point to the 480 and enter, and there we have it at 2033. Scrolling back over and scrolling up, we see the 2033. That then matches what we just saw in the subsidiary ledger. Actually, it's off by $1, but that's okay. Jumping back over to the PowerPoint and to the QuickBooks example, we're going to be ambitious and do 2 of these. So we're going to do the same thing. We're going to create another invoice, same type of transaction, except this one's going to go to Sam Guitars. And within QuickBooks, then, we would just enter the same information. It's going to be the invoice, different type of guitar. This one's a Wildcat. It's an Epiphone Semi-Hollow, and it's $400. That would populate automatically. If we multiply that times 5%, we get $20 on the sales tax, which would add up to 400 plus 20, or 420, which would be the total amount of the bill. What this would record, QuickBooks would record automatically an increase in accounts receivable for the 420 total amount that we expect to receive. And then we would credit the sales, but that for the sales price of 400. This is what QuickBooks is going to do. When we just populate this nice easy input screen, it would also credit or increase the sales tax payable by the 20 and record the reduction in inventory, in this case of the Epiphone Semi-Hollow, the Wildcat, and record the related cost of goods sold by amounts that we don't see here on the invoice, but that QuickBooks knows by the fact that we have an item here, amounts that we will see and figure out as we record this in Excel. Back to Excel, we're going to record this information in F19. We'll start with the date, and that's going to be 220. And it's going to be the same thing, so you're tempted just to like copy these right here. You're probably very tempted to do that. I'm going to resist the temptation just to copy those and go through the process. We're going to go through the process. So we're going to say, is cash affected? No, cash isn't affected. We made a sale on account. Accounts receivable is going up. It's a debit balance account. We're going to make it go up by doing the same thing to it, which is another debit. So we're going to copy the accounts receivable, put that on top. In cell G19, right click and paste 1, 2, 3. The amount then will be the sticker price, which we would know because it would be on the guitar, 400, and then times 0.05, 5%, another $20, plus the 400 gives us 420. That could be calculated more easily or faster with one calculation rather than 2 by saying sticker price 400 times 105%, or 1.05. That 420. Same calculation one more time in Excel. Let's see it one more time because it's a good one. 400 times 1.05 gives us the 420. Then we're going to record the other side, that too, merchandise sales. Merchandise sales already has a credit balance in it because it always goes up in the credit direction. It being an income or revenue account, we will increase it by doing the same thing to it, which is another credit. So we're going to copy that. We're going to put that in cell G20, right click and paste 1, 2, 3, formatting that cell by going to the Home tab, Alignment, increase the indentation. Then we're going to say what that credit is. It's not for the 420, but for just the sticker price, the sales price, the amount we're selling it for, not including sales tax, that of 400, credit 400. The difference, 420 minus 400, means we need a credit of $20, that the sales tax payable. We're going to do that with the negative sum formula, the plug formula as I call it. Negative sum, technical term, double click and click those 4 items and enter. There's the 20. We are going to put that to the payable account for sales tax payable. There it is in AJ18. Right clicking sales tax payable, copying it, putting that in cell G21. Right click, paste 1, 2, 3. Then we're going to go to the Home tab, alignment group, increase the indentation. There's the journal entry we have journalized into the general journal. Now we're going to go through the process of posting this to the general ledger, starting with the accounts receivable. Screens are already frozen, so the pane has been frozen already, and we're going to just go ahead and say that's the second account on the trial balance, and therefore the second account on the general ledger. Scrolling over so we can see it side by side. There it is in AQ11. AQ11 is going to be equal to, pointing to that 420 increase in the balance from 2,120 by 422, 2,540. Scrolling back to the trial balance, we can see that 2,540 on it as well. Credit then, sales, merchandise sales. Here's the sales account on the trial balance. We're going to scroll to the right and find that same account on the general ledger. Scrolling right, here are the assets in green, liabilities in orange, equity in blue, and then there's the merchandise sales in dark blue. All credits here, all credits, revenue accounts only going up in the credit direction. We are currently in cell BH35. BH35, we're going to say equals and point to that $400 credit and enter, bringing the balance up to 2,000 in the sales. Scrolling back to the trial balance to make sure that that 2,000 has been populated in it, right there, 2,000. What happened to net income? Net income's now positive again. We have income, that being a credit, not being a negative number for us here. It is a negative number for Excel, but for us it's a credit, meaning the credits of revenue are bigger than the debits of expenses if we double click on it. And we're out of balance by 20, the sales tax, until we post the sales tax. Here's the sales tax that we're going to post. There's where we're going to post it. It's on the general ledger in the same location. So let's scroll over to that location, right clicking, or going right, and then we'll scroll down. There it is. It's in BD28. So we're going to say BD28 equals, point to that $20 increase in the 203 by 22, 223. Scrolling back, I should see that 223 on the trial balance. I'm pretty confident it's going to be there. There it is. We should be back in balance. Yes, we are. We've recorded the first half. We're still going to have to record the reduction of inventory and related cost of goods sold. But before we do, we have done something to accounts receivable. Here's accounts receivable. It represents people owing us money. And we've recorded the detail in the general ledger, but also need to, in the subsidiary ledger, record it by who owes us money, by customer. Scrolling to the right to find that subsidiary ledger. We'll scroll all the way to the right to find the subsidiary ledger. There it is. It's in cell CR to CX. We're looking for Smith Guitars. Smith Guitars. All right, there's Smith, and we're going to be in CR20, and we're just going to pick up that same 420 in CR20 by saying equals in CR20 and pointing to the 420, increasing the balance from 0 to 420. Then we're going to scroll down, and if I check that amount, 2,540, that's what all the customers owe us. If we add them to up, that's what they all owe together, us. That's what the accounts receivable should be. 2,540. Scrolling back up, I'm going to go back to the GL to see if that's what is on the trial balance. So I'm going to go right to the right of where the split is, and then click to the right to the left of where the split is, and then click to the right, and it pops back over. There's that 2,540. Looks good. Let's record the second half of our journal entry. That then is the fact that the inventory is going down. There's the inventory, debit balance. We're going to make it go down, doing the opposite thing to it, crediting it, right-clicking it, copying it, so we don't misspell it, and then I'll still find a way. But then we're going to skip a cell, we're going to skip another row, we're going to put it on the bottom in G24, right-click, and paste 1, 2, 3. We don't know what the amount's going to be yet, we'll have to look that up, but we can at least put this amount there, or the account there, and then we'll find the amount elsewhere. Going to the Home tab, Alignment, increase the indentation. Then we need to find the other side of that, which is going to be the cost of goods sold, the expense related to us consuming inventory in order to help generate revenue. Copying the cost of goods sold. Notice it's an expense account always going up in the debit direction. Paste 1, 2, 3 here. Now we need to find what the amounts will be. Go into the subsidiary ledger to look that information up. We're going to go all the way to the right, strolling to the right, strolling to the right, or scrolling to the right, which is similar to a stroll to the right. Nice and relaxing. And then we're going to go up to the cells. We have the column CE through like CP is where we want to be. And we're looking for that, the Wildcat. So it's going to be the Wildcat guitar, which is actually an Epiphone semi-Hollywood apparently. And at least that's what we named it here. So we're going to scroll down till we find that. There it is. And we have that there. And we're going to say that we sold one of those and they cost $320 each apparently. And we have one, we currently have just the one on stock. So we're going to say as of this date, 220, this one that we have right there, we sold it. So we should probably buy more soon. But in any case, we're just going to say that we sold that one tab and it cost 320. So let's calculate how much the total cost then would be. We're going to say that it equals 1 times 320, which is 320. How many do we have left then? Well, we had the one and we sold the one. What's in ending inventory? I believe 0. Let's do it with calculation. We'll do it with formulas just to make it complicated. We're going to say the 1 minus the 1. It's not just to make it complicated, by the way, because it's important to do. And we're going to say bring down the amount, which is equal to the 320 tab, and multiply it out, which will be 0. It'll be 0 times 320 or 0. So that 320 right there, that's the amount we need in our journal entry. So if we scroll up to the journal entry, which is up there, we need the 320 right here. So we're back over here into H23. I'm in H23 way on the other side when we had the freeze panes. This needs to be 320. Then we're gonna have a credit of 320. And now I'm right on the other side of where the screens were frozen. So if I click to the right, it'll pop back over there. There we go. And we can then record this. So, and also note that we didn't sum up the cells, so we'll have to go back there and sum and recalculate our total once after we record that. So hopefully we will remember to do that. And so here's the cost of goods sold. Here it is on the trial balance. We're going to go ahead and post it to the general ledger now. Scrolling to the right, scrolling to the right. And it's in order: assets and then liabilities and then equity and then income, and then cost of goods sold is in BK 25. We're in BK 25. We're just going to pull over that 320 into BK 25 by saying equals and pointing to the 320, bringing the balance up from 1,280 by 320 to 1,600. Scrolling back to the trial balance, we should see that same 1,600 on it right there. That brings down net income out of balance by 320. Net income, currently still income, of $54 for the second month. We then have the inventory. There's the inventory. Third account on the trial balance, therefore third account on the general ledger. Let's find the third account on the general ledger so we can post the general journal entry to the general ledger. It's going to be in AQ. So we're in column AQ, and we're going to go to the next available cell, AQ29, AQ29. And we're going to point to that 320. So we're going to say that equals and point to the 320, bringing it down from 2,033 down by 322, 1,713. Let's see if that same 1,713 is on the trial balance. It is. Now we're going to go all the way back to the sub ledger and see if we can get that same amount calculated on the sub ledger to tie it out to the actual count of the guitars. So we're going to scroll all the way to the right, and just like a nice stroll to the right, we're going to scroll to the right, and we're going to scroll down. Then we're all the way over in columns CG to CP, scrolling down to the end, and we need to update this cell, I believe. So I'm going to double click on it to see what it's doing now. It's picking up all the imbalances. If I scroll up, it's picking them all up. And then that one, not the right one. It should be the one below it. It should be the 0. Now it might be easier. We could find that cell and then fix it because it's going to be the one with a 66. So it's like, but I'm just gonna enter and then delete it and just recalculate it. So delete it and then just say equals, scroll back up. My eyes are getting tired, so it's just an easier thing to do. We're just going to say that, and then there it is, plus, there's the formula. The second one, plus, there's the formula. The first one, plus, there's the formula. The second one, we're always taking the last one, and the second one, plus, I'm hitting plus after each one, there's the formula. And there's the last one, which is the 0. I think that's the new one that we just added. And then the 0, and then plus, and then the last one, and then enter. And it comes out to $1,712, $1 different than what we had on the trial balance. That's okay. It looks good. Then we're going to go all the way back. We'll just check the financial statements, and we are done. So I'm going to click right on the left-hand side of the freeze panes, and then scroll right once again so it pops back over there. We're going to check the financial statements. We made a few changes. Those to the accounts receivable was a big change. I'm just going to point to that on the financials to see what happens on them from the changes we made. Inventory, going to point to that to see what happens on the financials from the changes we made. Sales tax payable, I'm going to do a similar process, as well as the merchandise sales, which has been a busy session here. We're going to do the same thing for the cost of goods sold. That's enough. That's all we need to look at. And I'm going to unfreeze the panes before we go over there, so we have all the space we need by going to the View tab, and then the Windows group, and then the Freeze panes, and then the unfreezing of the panes. Pane has been unfrozen. Scrolling all the way over, it's going to be okay because we fixed the pane, and we don't need to freeze the panes. So we are here, and we have the 2,540 for the accounts receivable adjusted automatically, as did the inventory assets. We see that the sales tax payable adjusted, and we still have the same number, or an equivalence in total assets and total liabilities and equity. That's a good sign. We see that the revenue was affected by these two transactions, these two invoices that we made, as was cost of goods sold. The difference is between those two in terms of how much of a net increase was there in gross profit as well as net income. If we look at the bottom line, we have $52 in the second month here. That 52 is part of our statement of owner's equity calculation to get to the ending owner's equity balance of $144,229. That balance also found on the balance sheet right there, $1,044,229